RIN TV coverage of the 2015 NAPSLO convention is brought to you by the Lexington Insurance Company. The property insurance market has been influenced by new capital entrants, data and analytics, government programs, and more. Here, Jamie Miller, head of Property North America at Swiss Re, reviews these and other issues during the recent NAPSLO convention in San Diego.
I think the biggest challenge with the factors driving the market, Rob, are overcapacity in the space, primarily driven off of the lack of large nat cat losses, right? We have a very high level of carriers entering the market in markets that have been there. You've seen the growth of the E&S space to, I think it's north of $40 billion across all lines today. From 10 years ago, it was somewhere around $4 to $6 billion. So the space and tremendous need with that growth of space. And so markets have come in. And by market conditions being as favorable as they've been with the lack of large losses, oversupply is by far the most dominant factor for us right now. New capital entry has been, it's a real quandary for a lot of different opinions in the space, I guess I would say. You know, there's been a significant amount of stable long-term players in the space. The new capital is using a lot of the most advanced technologies to figure out how to get into the right places, how to model it, how to be maybe more creative than some of the traditional markets. I think the debate on the new capital is going to be how will it perform under difficult market conditions. And that's the true test of all insurance companies, is how do they perform when the incident happens or the large event happens. If they perform well, they'll be well viewed, they'll perceived to be a long-term player. If they react more conservatively or more aggressively and leave the market, then I think that will have a long-term impact. So people are watching very closely the new capital. It seems to be broad-based. It isn't just in one niche area. Initially did a lot of nat cat risk type exposure, but that tends to be growing and changing. And as the E&S space changes with more program business and more MGAs and more aggregators, I guess is the term I would use, Rob, I think that's going to be interesting to watch, because that kind of capital engagement is very effective in modeling when it has aggregation pools to manage. And clearly one of the trends in the industry is moving in that direction towards more of what I would call aggregators of similar homogeneous exposure. Well, I think we're very active there at Swiss Re. I think one of the things we're trying to do, and I think others, we're not alone, clearly others are doing it as well, but we have made a very strong commitment to using more and more modeling sophistication, more and more big analytics, more and more partnerships with people that can help us develop more solutions on big data points. And I think you're going to see others do the same. I mean, when we talk about big data, today it's very, it's an in term, right? You hear it in every part of your life, whether you're talking about Google cars or insurance. The truth of the matter is big data has been around, and if you look at nat cat modeling, that's what nat cat modeling developed on the factors and the elements of big data. And so all you're really seeing is a more granular ability to analyze more types of data than we did in the past. It used to be nat cat only. Well, today now with iPhones and every other type of communication element, you can track behavior on all fronts, and there's products that come out of that tracking, whether it's in the commercial retail business or whether it's insurance. And so I think you're going to see a big change in that space for us. Yeah, I think the question of government involvement in nat cat and in insurance is really dependent on the regions in the world and the sophistication of the individual markets. In the US, we are very involved on both the reinsurance and insurance side of the house to offer solutions. So in some cases that could be part of wind pools or exposures related to flooding, or even on a federal level where we're very engaged with trying to see where the solutions could be out there for difficult problems that affect the country, whether it's flood, whether it's earthquake, whether it's wind. So we've put a lot of effort on the insurance side of it, the transactional side of it. We've put a lot of effort on individual risk alternative solutions. So offering multi-year solutions, offering products that cover gaps around traditional insurance for municipals. things of that nature. And on the reinsurance side, we're very active with where the need might be for reinsurance support. And that will depend on how the government wants to handle these issues, whether the government feels that there is value in the insurance and reinsurance support. But for us personally, I think our best opportunities for what we do in corporate solutions is clearly on the transactional level. And that is where we see the opportunities where there's a need for increased flood limits and things of that nature where traditionally there's not enough capacity coming out of the federal programs. I think this whole world of, well, for lack of a better term, I'm calling it program business, is really growing. If you look at the increased scale of the major brokers in the E&S space, there's more and more consolidation of data. There's more and more ability to offer their own solutions, whether it's an MGU or an MGA or offering some kind of aggregation, as I mentioned earlier, aggregating of exposures. Well, brokers have tremendous data, and if they can find ways for that business to be homogeneously joined, they can either offer solutions that they drive or they can go to markets to help them create solutions for their clients. But that's probably the biggest change, is that what you're seeing is that the ability, and part of this is big data and analytics, is the ability for markets and brokers in particular to consolidate multi-line data and to start to begin to offer program-type solutions. There's more of that now than there's been in some time, and I think that's going to be an area that's going to continue to grow.
For more of our coverage of the 2015 NAPSLO convention, visit the RIN TV On Demand Library.